Visa is a global leader in digital payments and the largest payment network in the world. The company IPO'd in 2008, and since then it has massively outperformed the S&P 500. In 2020, before the stock market crash, Visa shares were trading for $213. They then fell 36% during the stock market crash. Today, Visa is in almost a 30% correction once again from its all-time highs and trading for $177 a share, which is below where the stock was trading in 2020 before the stock market crash happened. The stock has essentially lost 2 years of gains, which is causing many investors to ask if Visa stock is a buy now. In this video, we are going to be doing our best to answer this question. So let's start off with my favorite thing to do, which is taking a look at our stock unlock insights. Right away, we can see that Visa has a stock unlock insight score of 4.24 out of 5, which is pretty high. There's not a lot of stocks out there that score this highly. So let's take a look and let's break it down. Right away, we can see that Visa has a dividend score of 4.8 out of 5, which simply means that the dividends are growing and the dividend payout ratios are not high at all. So Visa's dividend is very safe and it is growing. But also, Visa is not known for paying a very high dividend. I believe that the dividend yield right now is below 1%. The company is actually much more focused on buying back shares, which we are going to see later on in the video. Now, if we scroll down, we can also see that Visa has a profitability score of 5.0. It's literally a perfect 5. The gross margin, operating margin, net margin, free cash flow margin are all incredible, and the free cash flow margin is sitting at 57%. So over half of the revenue that the company generates is converted into free cash flow for investors. It's incredible. This is a highly profitable business. If we take a look at growth, the score is 4.0 out of 5, and the reason it's not higher is because the company's book value and tangible book value are decreasing. This is probably because the company is spending so much money on buying back shares, which does decrease the cash position and ultimately the book value. We can see that the revenue grew by 24% over the past year. Gross profits, operating income, net income, operating cash flow, and free cash flow are all increasing by over 20% year over year. Those are incredible growth rates, and this company is definitely growing incredibly quickly. The financial health is 2.6. This business, the reason it's not higher is because they have a lot of intangible assets on the balance sheet. In fact, the company has a negative tangible book value. So there's a lot of goodwill and a lot of intangible assets on this company's balance sheet, which typically isn't viewed as a good thing. But you got to keep in mind that Visa is an incredibly highly profitable company. Like, it's just ridiculous. So I don't think that this company having a lot of goodwill or intangibles is necessarily like a bad thing in this case. Anyways, the shares have decreased by 2.5% over the past year, which is what I mean. This company is very focused on buying back its shares, and that's where a lot of its free cash flow goes, is just buying back shares. Now, lastly, we can see that the returns right here are 4.8 out of 5. The company has an ROIC of 35%. That is insane. ROCE of 29%, return on equity of 41%, and return on assets of 17%. This is all very good. So this company is able to reinvest back into itself and produce a large amount of returns for the business and ultimately its shareholders. So when I take a look at Visa, this is a company where it can invest its money incredibly well. It's growing incredibly well. It is ridiculously profitable. Its dividends are awesome, and they're safe, they're growing incredibly quickly, and its valuation does look quite attractive right now. So let's take a little bit of a deeper look into this company's financials, and I really just want to see what the revenue is doing. So let's zoom all the way out to 2007. And remember, Visa became a public company in 2008. And since Visa became a public company, its revenues have pretty much just been uptrending. We did see a little bit of a dip to Visa's revenues in 2020, all the way out here to about 2021, while the economy was shut down. So while the economy was shut down and it looks like we're not spending as much money on Visa's platforms, the company's revenue did decline. However, the revenue has since come back, and now it's sitting at an all-time high. And in the trailing 12 months, this company has produced about $28 billion in revenue. But this right here is definitely something to notice, is that you got to think about this. From 2008 to basically 2020, we lived through an economic expansion. We didn't have a bear market. And then finally in 2020, we entered a bear market and the economy shut down. Like, we were going to enter a serious recession if the Fed and global governments didn't do some sort of monetary policy. And in that environment, Visa's revenues went down. It was only after, the Fed printed so much money and stimulated the economy so much that Visa's revenue started coming back. If we head over to the cash flow, this is the exact same story. Visa's cash flow dropped in 2020 and now came back and is sitting at an all-time high. But also Visa's cash flow is much more volatile than its revenue. As we saw, the revenue grew consistently over like 13 years or something like that, but the cash flows kind of seem to go all over the place. However, we can see that the company is producing a record amount of free cash flow right now at 16 billion. And in the most recent quarter, they did a record quarter of free cash flow at just over 5 billion. So the company is literally making as much money as it ever has before. And all the fundamentals look like they are sitting at an all-time high, which is interesting because remember, the stock price is lower than where it was in February of 2020, even though the company is producing more revenue and a lot more money in terms of profits. Now, also, we can see right here that in the trailing 12 months, I believe I'm on the trailing 12 months. No, let's head over to the trailing 12 months. And right here, we can see that in the trailing 12 months, Visa has paid out about $3.1 billion in dividends to shareholders, right? But if we take a look at the net common stock issued, they've bought back $12.2 billion worth of stock. So they essentially spend they spend 4 times as much money, there's the words, on buying back shares as they do paying a dividend. And that's why I say this company is so much more focused on buying back shares than on paying out dividends to shareholders, which also means that this stock is more focused and this company is more focused on increasing its share price by reducing the share count than paying out dividends and being more like an income stock to its investors. That is also something you want to pay attention to. But what's interesting is even though Visa historically has not paid out a massive dividend, like right now their dividend yield is about 0.84%. And right here we can see that really that's like as high as it gets. Usually when Visa's dividend gets to about 0.8%, that's as high as it gets. That's as high as the market allows it to go. But take a look at how quickly Visa's dividend per share is growing. Right here we can see that it's growing just ridiculously quickly. And what this means is that if you were to buy Visa right here in 2009, your dividend yield on cost would now be about 13%, just because of how quickly this dividend is growing. So Visa has actually been a very good dividend growth stock, even though its dividend yield has basically always been under 1%, which is very interesting to me. Let's go and take a look at our freeform tool. And I want to show you guys some more ridiculous things about Visa. So this is Visa's revenue right here, right? And then we're also going to go to the free cash flow. And we're also going to put in the capital expenditures for the business and take a look at just how this business has performed over time. So this bottom line down here, the dark blue line, is the Capex, which is essentially how much money the business needs to spend to make sure that the business is operating and growing. Take a look. Okay, so Capex in the trailing 12 months was only $883 million. The revenue was 28 billion and the free cash flow was 16 billion. This tells me that Visa needs to spend like absolutely no money to grow revenue, grow cash flows, and remain profitable. This is the type of business that is so incredibly attractive during high inflationary times because, again, it doesn't require like any money to grow and produce profits, which ultimately means that with high inflation, their cost to produce revenue and profits and grow revenue and profits isn't going to eat into the profit margin that much at all. If we actually take a look at their free cash flow margin, let's just take a look. Right now, it's sitting at that 57%. And if we take a look throughout history, it's actually on the higher end right now. So even in this high inflationary environment, Visa is like as profitable as it's ever been. Maybe not quite as profitable because the free cash flow margin was 60% in 2021, but still 57% free cash flow margin in high inflation times. That's pretty incredible. This is a very incredible business. The next thing we're going to do is take a look at this business's price to free cash flow. And we got to ask ourselves, like how much is this business worth? What's it trading for right now? And let's zoom out to about 2015. So we're taking a look at the past 7 years. And right now, Visa's price to operating cash flow is about 22.9, basically 23, okay? Now, back during the stock market crash of 2020, the price to operating cash flow was 27. So right now, in terms of Visa's free cash flow, it's actually cheaper than it was during the stock market crash of 2020. Now, the only time over the past, seven-ish years that the price to free cash flow was lower than it was today was in 2008. And if you guys were in the stock market during December of 2008, there was a massive correction right before 2019 happened. And during this correction, Visa's price to free cash flow got down to about 22. Basically, Visa's price to free cash flow right now is approaching levels that we only see in stock market crashes or in major stock market correction. And you got to think about this. This is a business right now that's also growing its revenues by double digits. Cash flows are growing by double digits. and it's growing incredibly well. And in my opinion, it also has a very strong moat. Honestly, this stock is looking very, very, very attractive to me. And it's selling for a price now that we typically don't see outside of stock market crashes and major stock market corrections. The only thing that's causing me personally as an investor, I'm not a financial advisor, I'm just my own person, but the thing that's causing me to not buy Visa right now is because of this right here. In 2020, when the economy shut down, Visa did lose revenue and it lost profitability. Again, Visa basically hit the stock market in 2008 and then just saw this massive economic expansion. So really, I don't know if we do enter a recession with all of the rate raising and the macroeconomic environment kind of deteriorating. I don't know if Visa's revenue is going to continue growing over the next couple of years, or if its cash flows are going to continue increasing over the next couple of years. When I think long-term, like over the next decade, I think it's almost a no-brainer that Visa is going to continue growing. But over the next few years, I am not so sure. And what that means is that if Visa's free cash flow drops, in 2023, 2024, then its price to free cash flow on the cost today is going to go up. So maybe when we're looking at the trailing 12 months, it's got, 22 price to free cash flow right now. But if cash flow drops, maybe that would shoot up to 30, which would make it not as cheap, it looks like. Now, we can head over here to our analyst segment on Stock Unlock, and we can see that analysts are expecting Visa's revenue to grow at a 10.3% compounded annual growth rate out to 2026, along with EPS growing by 14% compounded annually to 2026. So analysts do think that this business is going to grow. And on average, analysts do think that this stock is a strong buy. I mean, man, this is a very, very attractive company. I honestly can't think of a better inflation hedge, because if there's more inflation, more money entering the system, I mean, it's going to be transferring around on Visa's payment networks, right? The price ratios are incredibly attractive right now, and the business is still growing. So basically what this comes down to is, if Visa can continue growing over the long term, then in my own opinion, I think this stock looks incredibly attractive today. However, if the business does not continue growing over the next few years, then I wouldn't be surprised to see some more downside. But for long-term investors, honestly, I think that the price right now and the price ratios right now look incredibly attractive, especially, again, if you're a long-term investor and you're looking out 10, 15, 20 years. Again, I'm not a financial advisor. This is all just my own opinion. And full disclosure, I do not own any Visa shares, but this one is creeping up on my watch list and on my buy list because it's just a fantastic business. It requires no money to operate and grow. It just produces cash for its shareholders. Like, it's a cash flow machine. It just gushes out cash. It just looks like it's getting to a very attractive price. So that's kind of my opinion. And I would love to hear your guys' opinions down in the comments section below. Also, if you enjoyed this video, then please remember to leave a like on it. And if you're interested in getting a 14-day free trial to Stock Unlock, which is the platform that we use here on our channel and the platform that we're building, then you can get a 14-day free trial by clicking the link at the top of the description. You don't need a credit card, you just need your email, and you can come and try out the platform and all of our features for free. This platform will turn you into a better investor, okay? We have so many amazing features, and our Stock Unlock insights right here will give you a very quick analysis and glance into a business's fundamentals, literally instantly. You can find much better investments and avoid seriously bad investments by just taking a look at our Stock Unlock insights and seeing what we have to say about the company's fundamentals and pointing out the good and the bad that we find. Seriously, this platform will make you a better investor. Go and get your 14-day free trial, try it for yourself, and I'm pretty sure that within the next 2 weeks, if you use this platform, you will become a better investor and a more confident investor. So go and check it out, get your 14-day free trial, subscribe to the channel if you're new here, like the video, and thank you guys so much for watching. I truly do appreciate it, and I really hope to see you all again in our next video.